Hey there, investors! Today we're diving deep into the world of NVIDIA, a titan in the tech industry known for its powerful graphics processing units, or GPUs. These chips are the beating heart of everything from gaming PCs to artificial intelligence. But lately, NVIDIA has faced some headwinds. You see, trade restrictions imposed by the US government on exports to China have put a dent in their bottom line. These restrictions, which specifically target NVIDIA's high-end AI chips, have sent shockwaves through the tech world. China, a massive market for NVIDIA, has long been a key driver of their growth. Now with this new roadblock in place, investors are understandably concerned. The question on everyone's mind is, can NVIDIA overcome this challenge and emerge even stronger? Let's break it down. The impact of these export restrictions is nothing short of significant. We're talking about a potential loss of $5.5 billion in revenue for NVIDIA. To put that into perspective, China accounted for a hefty chunk of their business, about 14% of their total revenue in 2024, which translates to roughly $17 billion. That's a big deal, folks. When news of these restrictions broke, NVIDIA's stock took a hit, plummeting by around 7% in a single day. Analysts scrambled to reassess their forecasts, with Morgan Stanley, a major investment bank, lowering their revenue projections for NVIDIA's data center segment by a significant 8 to 9%. Clearly the market was feeling the heat. But hold on, because there's more to this story. Amidst the storm clouds of trade tensions, a ray of sunshine has emerged for NVIDIA in the form of lucrative deals with the Middle East. That's right, Saudi Arabia, a country known more for its oil reserves than its tech prowess, has inked a multi-billion-dollar deal with NVIDIA to fuel its ambitious AI aspirations. The Saudis are going all in on AI, pledging a whopping $10 billion to transform their nation into a global AI hub. And they're turning to NVIDIA, the leader in AI hardware and software, to make it happen. This isn't just a quick fling, folks. We're talking about a long-term partnership with the potential to reshape the AI landscape. Saudi Arabia isn't the only Middle Eastern nation jumping on the AI bandwagon. The United Arab Emirates, another regional powerhouse, has also struck a significant deal with NVIDIA. We're talking about an agreement that will see NVIDIA supply over 1 million of its cutting-edge AI chips to the UAE. The details of these deals go beyond just hardware. We're talking about comprehensive partnerships that include training programs, software development, and joint ventures. These are not just one-off sales, they represent a sustained commitment to building a robust AI ecosystem in the Middle East, with NVIDIA playing a central role. Section 5: NVIDIA's comeback strategy, diversification and growth. So what does all of this mean for NVIDIA? In a word, diversification. By expanding their reach into new and promising markets like the Middle East, NVIDIA is reducing its reliance on China. This strategic move helps mitigate the risks associated with geopolitical tensions and trade wars. Analysts are bullish on the potential of these Middle Eastern partnerships, projecting a market worth a staggering $50 billion by 2030. That's a lot of growth potential, even if it doesn't fully offset the losses from China in the short term. Section 6, diving in, a bottom fishing opportunity in the making. Now let's talk about the million-dollar question. Is NVIDIA a buy? With its stock currently trading around $135 and a price-to-earnings ratio of approximately 20, some investors see a potential bottom fishing opportunity. TipRanks, a platform that aggregates analyst ratings, gives NVIDIA a strong buy consensus, with a price target of $164.51. Big names like Jefferies and UBS are even more optimistic, setting their sights on a $185 target. Could this be the start of a comeback story for NVIDIA? Section 7. Navigating the shifting sands. Risks on the horizon. But hold your horses, folks, because it's not all smooth sailing ahead. Investing in the stock market always comes with risks, and NVIDIA is no exception. The ongoing trade war between the US and China remains a wild card. An escalation in tensions or the imposition of further tariffs could throw a wrench in NVIDIA's plans. Then there's the competition. Huawei, a Chinese tech giant, has been aggressively developing its own line of AI chips, known as Ascend. While NVIDIA currently holds the technological edge, Huawei's presence in the Chinese market cannot be ignored. Section 8, the final call. Is NVIDIA a buy? So there you have it, folks. The bottom line is this. NVIDIA is facing some real challenges, but they're also making bold moves to overcome them. The Middle East deals are a game changer, offering significant growth potential and reducing their reliance on China. While risks remain, the potential rewards are too enticing to ignore. With a strong track record of innovation and a strategic vision for the future, NVIDIA could emerge from this period even stronger. As always, do your own research, consider your risk tolerance and invest wisely.